Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the market cycle ROI as measured from the bottom and as measured from the halving. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So this model is one of the main models we've discussed on the channel for years. And the general idea, as we've always maintained, okay, is that at the end of the day, at the end of the cycle, we'll likely look back and the market cycle ROI will likely be less than the prior cycle, which was less than the cycle before that, which was less than the cycle before that, okay? That was one thing, so diminishing returns. The other thing, lengthening cycles, in that, this one peaked quicker in about 200 something days, this one peaked in about 700 something days, this one peaked in over 1,000 days, therefore we probably would expect the next one to peak even later on. Now, obviously, you can say, hey, this is a bit dubious speculation that you're extrapolating 3 data points, and I would agree. We should also recognize that diminishing returns and lengthening cycles are not necessarily married. You could have one and not the other, or you could have both, or you could have neither. So we need to, make sure we understand that. I think we're going to have diminishing returns and lengthening cycles, okay? If 64K is the market cycle top, which I don't think it is, but if it were, then we would have diminishing returns and non-lengthening cycles. If we put in a new top later on this cycle, and it does not the market cycle top, then we'll have lengthening cycles, assuming it happens after 2021, and maybe not diminishing returns. It'll depend on how high we go. I mean, this is measured from the bottom. Therefore, if it's measured from the bottom, we would need to go up about 100x or more from the bottom to not put in diminishing returns, which would be over $300,000 Bitcoin by the end of the market cycle. So, if you followed the channel, at least over the last several months during the crazy mania phase that we saw, one of the things that we speculated on quite frequently was that, hey guys, we are ahead of schedule. We are very much ahead of schedule here, and there is very likely going to come a phase in this cycle where we have a sustained downturn where we do not see a V-shaped recovery. Okay, now there are a lot of people that assume that we will have a V-shaped recovery, or maybe they assumed that we would. I don't think that they're still saying V-shaped recovery because it's not. Again, this is not what a V looks like. And the reason maybe they assumed that was because, again, they're tracking the last cycle and saying, well, hey guys, I mean, the last cycle had a V-shaped recovery, or in order to stay on track with the last cycle, this is what has to happen. But again, if you dubiously speculate, like we do in terms of extrapolating prior trends, not just necessarily looking at the last cycle, but looking at prior ones before that as well, we came to the conclusion that, hey guys, probably not going to have a V-shaped recovery. And in fact, this move makes a lot of sense. From, just from like a fundamental perspective, it makes a lot of sense. I mean, Bitcoin went up 20x in 14, 15 months. We really had not tested the 20-week SMA hardly at all. I mean, we tested it in October, and then that was it. And so we were like, okay, well, are we too far gone to hold it? It turns out we were. And we said all along that there is a decent probability that we get below this cycle, below cycle 3. Meaning, in order to get below it, we need a cool-off phase. Whether that means going sideways for a long time or going down, we need a phase where the market cools off and we get below the cycle ROI of the last cycle. Now you can see that we're below it. Okay, you can see that we are in fact below it. We're hovering essentially at about a 10x ROI from the market cycle bottom. Okay, we're hovering at around a 10x ROI. So, one of the things we speculated on a couple months ago is that, well, hey guys, I mean, for us to have any prayer of making it to this 300K by the end of the year predictions, which is in line with, say, like the 4-year cycle theory with non-diminishing returns, then we would essentially need to be looking at $100,000 Bitcoin by the end of July. Obviously, we're in July now. That's looking very unlikely. So while I think it might be too early to necessarily, say that, okay, we're not going to follow this because you never really know what can happen. At least it is playing out in a way that makes sense, and that, hey, it makes sense that we're getting below this cycle. And one of the things we speculated on is that at one point, cycle 4 was ahead of cycle 2, but we did not keep pace with it. And just because cycle 4 now is ahead of cycle 3 does not mean we're going to, or a couple months ago, does not mean we're going to keep pace with it for the duration of the entire market cycle. So I would say, again, have some flexibility on what you think has to happen, because just because it happened like that last market cycle does not mean it has to happen like that this market cycle. Every cycle is going to be completely different, and you cannot expect things to play out in the exact same way it did from the prior cycle. Because again, one of the common things I find myself arguing against is people saying, well, you're not going to have diminishing returns, right? We're going to go to $300,000 by the end of the year. And I think sometimes there might even be a misconception about what even diminishing returns is, right? I mean, like, what does that even mean? Some people say that diminishing returns is not true, but then may argue that we're going to peak at 100K or 140K or something. And I'm like, well, if we peak at 100K, that's still diminishing returns, because whether you measure it from the bottom or the halving, you're still looking at diminishing returns. For instance, if we were to go up to 100K and have a market cycle peak at 100K, then the ROI from the market cycle bottom would come in somewhere around here, just over 30x, or about 33x or so, which is still way less than the market cycle ROI from here. If it came in at 200K, then we would be looking at, I mean, this is 10x, 20, 30, 40, 50, 60, so maybe somewhere over here, which is still technically diminishing returns, and being technically correct is the best way to be correct, right? I mean, it's still technically diminishing returns. So one thing, one chart I think, and I've shown this before, one chart that I think helps illustrate diminishing returns is to not look at this on a logarithmic scale, okay? Bear with me here. What does this look like on a linear scale? Okay, because everyone's used to looking at it on a log scale. What do these ROI charts look like on a linear scale? This is what it looks like. Okay, so first cycle ROI. You would have been looking at a modest 700x or so from the market cycle bottom. It's hard to get an exact price from the market cycle bottom because of how crazy the price data is from back then. The next one, 500x. The next one, 100x. You can see how significantly one cycle to the other drops, and like the current cycle, it just looks like a bunny hill so far. I mean, look at this. Like, what is this? I mean, what is this, right? I mean, this is all it is so far. So when we look at these, it's hard to look at a chart like this and say that there's non-diminishing returns, right? I mean, if you didn't have diminishing returns, again, we would already be looking at a $2 million Bitcoin if you compared to 2 cycles ago. But most people just compare to the last cycle, and this is why they come to the conclusion that, hey, we're going to keep pace with it. But again, the last cycle did not keep pace with the cycle before that one, which also did not keep pace with the cycle before that one. So the idea that this one has to keep pace suddenly for the first time in history for the duration of the entire cycle is probably not true. Even cycle 2 at one point in time was keeping pace with cycle 1. I mean, look at this, right? I mean, it was basically keeping pace with it, and then it fell off. But it didn't stop it from putting in amazing returns. Another thing to note too is diminishing returns are still, for Bitcoin, are still really good returns compared to where you're going to find in most other asset classes. So even diminishing returns, I think, it still provides a very attractive investment. Now, again, the other caveat is, well, some people like to measure from the halving. I prefer the market cycle bottom as opposed to the halving, because I don't think that every 4 years from now for the next 100 years, we're going to have a crazy like 100x return right after the halving. I just don't think that's going to play out. Therefore, if I don't think that's going to play out, and I don't think there's going to be a crazy bull market every 4 years for the next 100 years, then it doesn't make sense to measure it from the halving for me. But there are other people that prefer to measure it from the halving. Therefore, we're going to measure it from the halving. Okay, we're going to measure it from the halving. And we've done this before, and we speculated over here, right, when we were in the middle and before this, that yes, we're doing pretty well, but it will likely not stand the test of time in terms of staying in between it for the duration of the cycle. Okay, so that was what we speculated on. And again, even if you measure from the halving, you can see that we have in fact come below the prior cycle. So this makes sense. Okay, I think some people are upset that we've fallen off and we're not keeping track with it anymore, but it makes more sense now to me that we're below it, okay, than being up here. Being up here made me somewhat uncomfortable, to be completely honest, right? I mean, it made me somewhat uncomfortable. How quickly things were moving, and the fact that so many people were getting so bullish on the fact that we were going to go, or the idea that we were going to just continue rocketing upwards like, like these other 2 cycles did. But again, we've thought that we were ahead of schedule. You can see that it's playing out, it's coming down, it has come down for a while now, and we are well below now the prior ROI from the last market cycle if you measure it from the halving. Okay, we are well below it. To be at the prior market cycle ROI as measured from the halving, we would essentially have to be at the all-time high. But we'd have to be trading at around $65,000, $64,000 for us to be at the same market cycle ROI at this point in time as measured from the halving, and we're not, right? And we're not. This makes sense to me. Obviously, it might not make sense to some people if they have a different model. But from where I'm sitting, right, from where I'm sitting, which is a pretty empty room, this makes the most sense. This makes the most sense. A cool off phase for a while, and then hopefully a trend later on is what ultimately makes the most sense to me. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember, we do have the premium list. You can find a link to that at intothecryptoverse.com, or you can find the link in the description below, and the website is intothecryptoverse.com. Make sure you subscribe if you like the content. We'll be here all market cycle, so make sure you subscribe, and I'll see you next time. Bye.